Welcome to another episode of Off the Record with KyleSellsBiz. My name is Kyle Griffin. I'm excited to be here. Just coming off a fantastic July 4th holiday. So I'm revved up and excited, man. I couldn't wait to have our next featured guest for our session today. And oh my gosh, Dean, you can't believe it's like July already, right? I mean, the time is like
It's
flying by
crazy.
so fast.
Yeah, we're over halfway through the year. It's just nuts. Yeah, how
Oh
quick
my
time
gosh.
flies.
And I really want to talk to you because I'm just curious because in my world, in the merger and acquisition space, things tend to slow down a little bit during the summertime, which is probably customary with multiple businesses. I'm just curious from a sales perspective, are clients, putting a pedal to the metal? Are you still pushing through? They're taking time off, I, you always hear about that mailbox money. You
Yeah,
know what I mean. You want to have that revenue coming in no matter what you're doing, so matter the time of the year. A lot of clients talk about. A lot of my buyers talk about they want businesses that have seasonal income, so to speak. So trying to figure out a way to smoothen things out. So
yeah.
we have a lot to talk about today. So welcome to our session here on Kyle Sales Biz off the record. Today we're going to talk about maximizing business valuation through strategic growth initiatives. If you're listening to this program either live or on the recording, you're either a business owner looking to grow your business, looking for some tips on how to expand, make a business more profitable, or you're thinking about exiting at a certain point and you're looking for tips on how to make your business more valuable for your exit. We do have a lot of advisors that join our program from all around the country. So I'm excited today, man. I'm ready to rock and roll. Today we have a special guest, very good colleague of mine. His name is Dean Isaacs. And Dean is the founder and CEO of Vantage Group. He has over 19 years of B2B consulting experience, and he had multiple roles as a fractional CRO, which is a Chief Revenue Officer, and Chief Marketing Officer, CMO. He has successfully helped businesses scale to seven figures and beyond through high-impact sales and marketing strategies. Dean's revenue growth framework focuses on attracting ideal clients who buy faster, spend more, and stay longer. I love that, man.
That's
We
what we
want
want, right?
clients that spend more, stay longer, and buy faster, right?
Yep.
Welcome to the program, my friend.
Thanks, Carl. It's great to be here. Appreciate it. Yeah, it's this is a great topic. I love talking about business growth and scaling because that's the core of a lot of what we do with our clients.
Yeah, I mean, 100%, right? Or if you want to figure out how do you scale your business, either organically or through acquisition. We've been talking specifically about growth and revenue.
Yep.
We've had some tough times, right, coming out of COVID, and sometimes you see businesses cut back in their marketing budgets, and clients and customers, revenue is the blood of your business, right? So you don't want to slow down on that at all. So we're going to be talking about that. Before we jump into the nuts and bolts of the discussion, I'd love to hear about guest background, how you got to the point where you are today with your company Vantage Group. So maybe help us understand, a little bit of your background. That'd be helpful to start.
Yeah, absolutely. So I'm from London, England originally. I've lived in the States for a little over 30 years. And so my business experience comes from the perspective of the US, right? So it's a different market to the European market. And I've enjoyed building my career here and intend to continue to do so. My corporate background, which is where I started before my consulting business, was in B2B sales. I spent the first part of my career selling into the Fortune 500, into enterprise, selling technical software solutions and professional services and all of that fun stuff. I had the opportunity at one point in my career, I was in software in the healthcare and hospital space, and was able to take on the marketing role in this organization as well. So I was in charge of both sales and marketing and grew that business significantly. So my first half of my career was sort of that sales and marketing leadership, B2B, sort of strategic selling. And I really loved that whole part of my career. But I had an opportunity to jump out into the entrepreneurial world about 20 years ago, and ended up becoming a partner in a management consulting practice. So we did strategic planning work for small and mid-sized businesses. And I learned a lot and enjoyed that period of time, 6 or 7 years of doing that down in San Diego, California. And so what I learned was I love sales and marketing. I love revenue growth. I love being intentional about that. But the piece that was often missing with the small and mid-sized businesses was a clear growth strategy, right? So marketing was doing one thing, sales was doing something else, and the business owner had a vision for the business and they didn't communicate it. So there's this lack of alignment. And so back in 2011, when I exited the management consulting business and started Vantage Group, that was my vision for the business, right? It was to pull those three pieces together, because I felt like that's what I love doing, first of all. But secondly, that's where business owners attain the most value from the services that we provide. So that business growth strategy and sales and marketing strategy, bringing those things together is one of the things that I've seen accelerates growth and increases valuation faster than anything else, because it's alignment of those four things. So that's been my background.
That's pretty fascinating. Moving to a totally new city, right?
Yep.
That's, quite an experience. And you went from what, 0 to 6 figures in like under 14 months. Let's talk about that.
Yeah, it was quite a journey. So I'd lived in Denver, Colorado before. My wife's from Denver. I'm here now. We moved away for a number of business opportunities. But when I started Vantage Group, I actually was living in San Diego, but I started the business here in Denver. And so for the first 6 months, I was traveling back and forth until we got our move complete. And then we moved here that summer of 2011. And I had no network. I had no connections. I had people from like when I was in industry, right? But I didn't have my referral partners. I didn't have that support network around me. And so the way I built the business very quickly was 3 fundamental things. And it's part of what I teach my clients today is get really clear on your ICP, your ideal client profile. Know who the heck it is you want to work with, right? Really, really important. Second is understand your ICP. It's one thing for us to say, we're great at this stuff and here's how we do it. But if we're not empathetic, we don't really understand why our prospective clients are going to buy from us, specifically how they see the problems that we can solve, there's going to be a disconnect. So I spent a lot of time talking to business owners and really understanding the buyer and the perspective so I could position myself appropriately. And then the third piece, as you know, us folks in professional services, a lot of our business comes from referral, right? And I see so many service providers and professional services companies and businesses in general trying to create referrals, networking like crazy, and getting no results. They're spending too much time with the wrong people. So I developed what I call the referral partner profile, which is a clear profile of the individuals that have a high likelihood that they can refer to me, and I can also refer back to them. So I was spending all my time with high probability referral partners too. So those 3 things together are what helped me really accelerate the business quickly.
Yeah, I love that. ICP. For actually, first time I'm hearing that. I mean, I know the term, but as far as that acronym, ICP, different ways you can tag it. But I like how you said your ideal client profile. I mean, ideally, you should know who your customer avatar is, who your client avatar is. Who is the right fit for your product, and seeing what makes them tick, what motivates them, and matching up your services or products with what their needs are.
Yeah.
Right. Understanding the ICP and the referral network is key too, right? So in a business, in a city where you have no connections at all, you probably learned that pretty quickly, right? How to build out a strategic referral profile partners.
Yeah, exactly. Yeah, it could be a lonely time if you're in a new and you don't know anybody. And I literally didn't know. I had no connection. So I found one really great networking group. Right, they're easy to find. You can Google them. You can figure out how to find business owners. And I actually started with ACG, the Association for Corporate Growth. And I knew that a lot of the people that were there were going to probably be good referral partners for me, right? They work with similar businesses. So I joined ACG, was really intentional about my activities there. And that was the foundation of my network in Denver. And it still is today, 12 years later, 13 years later.
Yeah, they've been around a long time. A lot of folks in my circles are part of ACG as well. So it's a great network. Let's talk a little bit about why is it important to integrate. You mentioned before about sales and marketing strategies when aiming to boost your business valuation. Like, let's talk about sales, marketing, and that process of integrating those 2 things.
Yeah. And I would even add the third component, which is business strategy, right? Business growth strategy, right? Because you can have marketing and sales can be aligned and create results. But if it's not the results that, as a business owner, if our goal is exit at some point, right?
Yeah.
And exit could look like a lot of different things, obviously, but if sales and marketing results aren't driving that purpose, then we're not going to achieve the goals that we want. So that business growth strategy, that strategic plan is first. You got to have that vision and direction for the organization. And then sales and marketing strategy aligned with that will help you get results. So obviously aligned goals is a big one, right?
Mm-hmm.
A lot of times marketing, if you've got a marketing department or a marketing team of one, right, it doesn't matter. That marketing person is probably focused on things like brand and content and lead and maybe lead generation. And those are all important components. And sales is focused on what? Generating revenue. But in both cases, those aren't necessarily aligned goals. So if I ask a marketer, define what you mean by a lead. Give me that definition. It could be anything, right? Usually it's like, Kyle fits the profile of our ideal client. We have his email address, his phone number. He attended a webinar. That's a lead. Well, sales thinks of a lead as a buyer-ready lead, somebody they can go and have a sales conversation with. So there's misalignment there.
Right.
So if we clearly define things like lead versus prospect stuff, even simple things like that, it gets people aligned. So there's no lag, because often what I see in smaller businesses is the salespeople are like, marketing's doing stuff. I don't know what they're doing, but it's not feeding my sales funnel. I have to go cold call. I have to go prospects. I have to go network.
Right.
It's that lack of alignment.
A lot of people get the two confused, right? Sales and marketing. They're under the same umbrella, but it's two different functions.
For sure. Yeah, exactly. Yeah, and that's a really good point. It's getting a clear definition of what marketing is versus sales. And for me, marketing is all about everything that happens before a salesperson has a conversation with a prospect. So there's this concept of MQL, and I don't want to get too technical, right? But that's a marketing qualified lead. That's somebody that's interacted with our brand, right? Maybe they've come to a webinar, they've requested information, maybe they even requested a quote, but sales hasn't had a conversation with them yet. Once sales has a conversation, they say, yep, Kyle really does have a legitimate opportunity we can help him with. They become an SQL, a sales qualified lead. So that often is that dividing line. Everything MQL or before is marketing related activities and SQL sales related activities. But of course, there's no clear line, right? It's a web of our interactions with our prospects in our market all the time. So marketing will support sales throughout the buyer's journey as well. So that's part of the alignment.
Yeah, I'm loving the acronyms that you have created there. It kind of makes it click. If you're training your team, right, these acronyms, and you obviously have some KPIs that are attached to these. By the way, just a quick plug here. So we are currently streaming on Facebook, LinkedIn, YouTube, and Twitter. And we have the comments, we have the Q&A open. So any questions, comments, we're primarily on LinkedIn for the most part. So join us over on LinkedIn. All the majority of the small business community is on LinkedIn. So, be sure to join us over here. But I see Winnie made a point here. She said lack of alignment. Yeah, major issue. So I can agree with you, Winnie, very much. And then, so you mentioned, you talk about sales, marketing, and then the third one you mentioned was growth strategies as well, right?
Yeah.
So everything has to be in full alignment, right?
Yeah, it does. Yeah, and I think there's a risk if a business owner starts talking about exit with their employees too soon. It can scare people off. You can lose key employees. And so when we do strategic planning with clients, when they have exit in mind, we don't talk about that with the team, right? We talk about it maybe with the very top of the leadership team, the ownership. But here's the great thing about this. If you build your business to increase valuation for exit, you're just building a great business anyway. And so you can still do those fundamental things. Your team can be behind it. They just don't necessarily need to know every detail of what our 3 to 5 year plan is. But they're right behind you with the growth strategy, with the sales, with the marketing, with process improvement, with efficiency. It builds a great business anyway. So knowing that is important going into the sort of planning process.
Yeah, and having that process, mapped out, where it's clear and easy to follow, is extremely important. As opposed to, you mentioned about the buyer's journey, but you also have the onboarding and employee's journey as well. So employee joins your company, so what's the strategy here? Like, so I just started today, how many leads I need to generate, how many sales calls I need to make, and what's the end goal here, right? And tracking all that and leading that back to a specific metric,
Yeah,
right?
absolutely.
So
Yeah, yeah.
having that whole process, documented and followed is important.
It is. It is. And knowing what metrics, what things do a potential buyer look for
Hmm.
that would, in their eyes, increase the value of your business? Because it's not just about revenue, right? You could
Right,
be a very high growth revenue company and losing a boatload of money
right,
and having
exactly.
unhappy employees and being inefficient. So really understanding all those key metrics are important, and sort of revenue and profitability usually are at the top of that
Mhm.
list, but there's a lot of other things as a business owner we need to be considering.
Well, well, let's talk about that. What are some key factors, in your opinion, from your lens, that factor into increasing the valuation of a company?
Yeah, yeah. Well, obviously revenue, right? We know that, and
Mhm.
I would say profitable revenue.
Yeah,
Having said that, companies like Facebook, they were pre-revenue. They lost hundreds of millions of dollars for a long time, and then they had their IPO, and of course we know the story there. But
yeah,
generally speaking, the businesses that we work with, you've got to be profitable, right? You've
yeah.
got to be profitable and in a consistent way. And so having your metrics, having your financial dashboards, having a CRM that tracks your sales funnel, having good financial health and being able to report that is really, really important. And so buyers will look at both historic numbers, maybe 3 to 5 years backwards. So you got to make sure your stuff is lined up there and really well
Mm.
communicated. But they're also going to look to the future. They want to know predictability into the
Yes.
future. They don't want to buy risk. If they buy risk, they're going to devalue you. So they're going to look maybe 3 years ahead. So from a sales and marketing perspective, do you have your processes in place that you can say, we do these things and it produces this number of leads, this number of opportunities, this number of sales and revenue? Can we predict into the future? And if you have your metrics in place, you should be able to do that.
Hey, Dean, I'm so glad you said that, because right now, that is one of the number one drivers right now we're seeing in the market. Buyers want to know that, okay, well, I buy the company day one, day two, is the revenue going to continue? And can I predict and forecast out what the business is going to make 6 months, 12 months out? And
Yeah.
if they can't, and increase the risk profile in that particular business opportunity, because now they pretty much buy the business on a hunch that it's going to continue. And maybe you take that key, whatever that key salesperson walks away and take some customers with them, or even takes your processes, right, your
Yeah.
proprietary process with them.
Yeah.
It's a huge risk factor. So number one is having a trained staff, also having a trained team that follows a process. So even if you unplug one personnel from the team, the process still works. And creating some sort of business models where you have repeatable and predictable income, that significantly increases the value of your
It
business.
does. It does. And every business model is different. So if you can generate MRR, another acronym for you,
Yeah,
monthly recurring
that
revenue,
one I
right?
know.
Yeah, right. Buyers love that, right? Because it is that consistent revenue. So let's talk about the customer piece of this.
Sure.
Having contracts and agreements with your customers, it is so important. Too many businesses do deals with a handshake. Well, us guys, we're good old boys, and it's all about no. That relationship changes when a buyer buys your organization. Have contracts in place, really important. Number one. Number two, if you can have renewable contracts, so maybe the initial phase is 6 months or a year, and they renew, even better valuation there, right? You mentioned key employees. Non-competes don't really hold up in most states anymore, right? Colorado just said, yeah, no, we're not, doesn't work anymore. So having a non-compete for a key employee is really important if your state allows it. But what you can do is you can have non-solicitation
Yeah.
agreements
Hmm.
where your key salesperson cannot solicit your current
Yeah.
customer. So you can
Yeah.
protect your
Yeah.
customer base there. Um, You can obviously have confidentiality NDAs with all of your employees. Protect your IP, right? Make sure your IP, your intellectual property, is protected, whether it's trademarks or patents or whatever makes sense for your organization. Protect your IP, because that's a value driver for the buyer, right? Even things like brand. If you've got a unique brand, some messaging, a thing that you say as part of your organization, if you can trademark that or at least copyright it, do that. Protect your IP and your marketing content, because again, that drives value.
Sorry, I want to interrupt you for a second.
Yeah.
I love what you said it, because right now we're in an age of innovation, AI, and technology, right? So
Yeah.
seeing how you can differentiate yourself from the marketplace, because, there are so many bots around, right?
So true.
And with all the consolidation, everything just starts looking the same at a certain point, right? I've heard that pitch before. Like, what separates your company from others? How do you differentiate your offerings from your competitors?
Yeah.
So I love that you shared about protecting your IP, trademarking, and protecting your brand. That's key in an age where, the world is just getting smaller and smaller and smaller.
It is.
Technology.
It is. Yeah. I mean, AI is an amazing thing. It's going to move us forward so far, but it's also going to put a lot of businesses at risk. And I'm doing a presentation next week with small business owners on how to leverage AI in your business to be more efficient and effective and all that. And the first thing I often lead with is protect yourself, right? Google, when I think it was ChatGPT first came out, when they came out really big, right, a couple of years ago, they stopped all of their employees using, it was either Google or Apple said you cannot use ChatGPT for any business-related activities, because they were afraid that their employees were dumping proprietary information into ChatGPT to get results.
Yes.
So your information security is really, really a concern. We don't. ChatGPT says that they don't share your information, but they're learning from something.
You make a good point. So even though most, I wouldn't say most, I'll speak for myself. I do use the paid version, right? But how I look at it, it's still, the value you get back is 100 times more. And how I look at it, if you're using a free service, you are you are the data, right? You understand what I'm saying? Like you are submitting data to an engine that's going to be potentially have access to a lot of information. You think about a lot of people that's dumping their ideas. So here we're talking about, sales, marketing techniques, different ways to grow your business. And imagine you're using ChatGPT to build out your model, and potentially you can have someone in the back end getting access to all that. So protecting your IP and your brand, your trademark. I love that you shared that. Let's talk about. I know I interrupt you. And if you want to continue,
no, you're good. You're good.
So, I run a name the company. Well, let me ask you a question, Dean. What's you have an industry focus as far as certain types of clients you work with? I know you're B2B primarily.
B2B primarily, yeah.
Are there any segments that you have a lot of high concentration of?
A lot. Yeah, we do. I would say two different sort of buckets of clients, if you will. One is professional services companies, technology companies, SaaS, MSPs. That's all one group. And then we do a lot of work with companies like manufacturing, distribution, commercial construction. So the blue collar side as well. So the professional services and tech, and then the sort of the blue collar companies as well. And they function very differently, right? The way they go to market, their client base, their strategies are very different.
Okay, so I own a SaaS company. I develop software to track, let's say, inventory, whatever the case may be, right? I've been doing well. I've been growing my company, but sales have kind of saturated a little bit. It's slowed down. From a sales and putting a sales and marketing and business strategy hat on, what are some tips for a company in the SaaS software space? Or it's all relative, right? We could apply it to multiple businesses, but what can I do to identify my target clients and ensure that I can attract them and capture them and have them and create some long-term success with those clients?
Yeah. It goes back to something
but I know you got it.
Yeah. You asked me about how I built my business in Denver when we moved. I would say the first thing I said was ICP, ideal client profile. It goes back to that. So we'll use your example. So a SaaS company that has an inventory management solution, there are a lot of different kinds of businesses that have inventory that might use your tool, right? So that you could be a generalist. Anybody that has stuff on a shelf, we could sell it to. Well, people aren't looking for a general solution. They're looking for a specific solution. So my
Okay.
recommendation would be go look at your current customers. If they're an existing business, they've got a track record, they've got revenue, go back and look at your current customers. Look at the ones that have been with you the longest, that have been the easiest to work with, that have maybe referred you to others in the industry, where you have some referable clients and stories. And what you'll probably find is that there are profiles within that. So maybe it's manufacturers, right? Manufacturers carry inventory. Maybe manufacturers are a subset of these companies that have inventory. So now we've got a little bit of a focus. Now we can market to that industry with their specific needs. So maybe they want to have low inventory on the shelves. They want to have just-in-time manufacturing.
Yeah.
So their need to carry just the right amount of inventory and know when to reorder is very high. So then we can focus on just-in-time in terms of inventory management. So we're niching, we're focusing, so we can appropriately develop a messaging for that part of the marketplace.
I love that, Matt. I think if there's any one takeaway anyone can take away from what you shared is profiling the successful clients you've had, your ideal client that have been with you and you've helped them. And you mentioned about creating clients that are easy, that pay quick and stay, right? If you have those clients already, profiling them and then matching it up when you're doing your outreach, trying to identify where they are and creating some messaging to attract them. And that goes the same for employees as well, right? You have you benchmark your team, your top producing salespeople, and seeing how you can duplicate out and attract the right talent as well. So
yeah, exactly. And you just said something that got me going here. Oftentimes in small business, the top salesperson is the owner. Right? The founder, the person that's sort of known for that company brand, they're the closer. You may have salespeople bringing deals in, but if you're the closer as the owner, you've got to take some time to transition that knowledge and that experience to some of your key team. Because if you sell and you walk away, that's a risk factor for the buyer. They're like, well, crap, Kyle closes all these deals. He's the guy that actually gets deals done. How are we going to replace him if he moves away as an owner? So just keep that in mind.
Yeah, I love that you shared that because a lot of clients that I work with, and we all have a little bit of egos with us, right? And I tell folks that are looking to start a business or buy a business that the employee mindset that many of us had at work for employees is to make ourselves where we cannot be replaced. Right.
Yeah.
So we want to do everything on our own. We want to increase our value. We want to have, multiple tasks and things we have to do in our role. But when you become an owner, it's completely the opposite, right? You want to delegate, you want to replace yourself. So if you're the top salesperson, that's a problem, right? So trying to find someone like you that has your same values, philosophies, and processes to generate a business. So fantastic. I see some questions coming in. Might we take a minute to see what we have here? So Raymond Alley, what's up, Raymond? So he says, for the buyer, how much should predictable cash flow depend on the exit management team, on the exiting management team?
Help me unwind that question a little bit. What do you think he's asking there?
So how much, and Raymond, you're welcome to restate. So he says for the buyer, right, how much should predictable cash flow depend on the exit management team? I think what he's essentially trying to say is that if you're a buyer looking to invest in a business, and we actually had touched on this earlier about having some predictable cash flow and revenue, but I don't get the connection to the exiting management team.
I think if he's asking if the existing management team is leaving after the transaction, how critical are they to future revenue?
Yes, I think that's it.
I think that's what we're going. So just like we mentioned, if they are critical to the revenue, future revenue, there's a risk involved there for the buyer. So having systems, having trained employees, making sure you retain some of those key employees, because as a business owner, you can help the existing management team stay in place when you negotiate with the buyer, right? You know that process, so that all the key people don't leave. Maybe there's a staggered event if they've got minority owners or founders. You can have a staggered event where over a period of years those key employees exit one at a time.
Yeah,
it doesn't just like strip out all of the value right away. So I think the more you can keep them, more you can maintain those people and those systems, and the IP is really important.
So I like that question, Raymond. You know why? Because right now is a huge trend called, well, not right now, it's been maybe a couple of years now, ETA, entrepreneurship through acquisition. So you have the entrepreneurs coming out of big MBA programs. They don't have the experience in running companies, but they're very talented, very sharp, very smart. But that management team, they actually need that talent. So we are seeing in a lot of deals where they're creating some incentive programs for that team to stay in, either some bonuses or even options, stock in the company, which kind of ties into a question, where did it go? So Daniel says, those monthly performance are important for SBA financing for acquisitions. Yeah, 100% right. We want to make sure that there is some continuity, right, in the profitability and the revenue in the business.
Yeah.
Right.
One other strategy to consider is, this concept of fractional executives, fractional CMOs, CROs, CFOs, all of the roles.
Yeah.
That's another way to create continuity during an exit. So if you, let's say, so I do a lot of fractional work. So I function as a fractional chief revenue officer, chief marketing officer, head of sales. And oftentimes I'm brought in as that sort of boost as they sort of start to move towards exit. And in one particular case, I was working with a client that did go through an exit, and the acquirer retained me for 6 months post-exit. So I'm that continuity, right? I'm being paid at a fraction of the full-time rate because I'm a fractional executive, but I have the experience, the talent, the know-how in the business. So they could retain that IP, that continuity post-exit. And so that's another way as a business owner you can consider engaging with a fractional, depending on the role you need. And that person can stay around for as long as they need post-exit to kind of bridge the gap.
Yeah, I mean, most of the work, so you've bought the business, right? And you're pretty much acquired all the goodwill, all the tools, employees, all the assets of that company. Yeah. So now you own that asset now. Now you have to get a return on that, right?
Right.
So this is when the true work starts, post integration, post acquisition. So yeah, retaining as much of the talent. And if you as a CRO or CMO, Dean, was responsible for the growth of that company, hey, we want to grow some more. We want to continue growing, right? And maybe it might be opportunity to, the bulb is like line up above my head here too. There's so many private equity groups and family offices that are making acquisitions, and they need folks like yourself to come in and make their acquisitions more profitable, right? Increase revenues and so on. You mentioned manufacturing, which is so we get a lot of data. So we use GF data as one of our data sources on trends and what's happening in the industry. And right now, manufacturing is a big sector right now as far as a lot of activities in that sector. Construction, software slowed down a little bit, but software, there's all wonderful sectors. So a few more comments here. Winnie said, I love the idea of companies being able to build the operations where they can sell the company to a buyer who would have little to no changes in operations for these 24 months. Yeah, so that goes up to my point. So these MBA students and graduates are acquiring these companies, but they need the experience of the management team. Yeah. So yeah, great point. Yeah. So we talked a little about some tips on how to grow, how to retain talent, how to find you a deal. I like to say client avatar, but I got to use your term here now.
ICP.
ICP, yeah, ideal client profile. I love that. So let's talk about some pitfalls, right? What are some mistakes that you've seen that our business owners are making as they're trying to grow their business?
Yeah, well, I think with exit in mind, like that's kind of the framework, is expecting that you can exit sooner than you actually can. Mm-hmm. Right. This is not a 3-month or a 6-month endeavor. It takes time, especially if you're in the value building phase of pre-exit. No, it's going to take time. It could be a year, it could be 2, it could be 3. So I think that's just sort of setting an expectation. Just because your buddy at the country club sold doesn't mean that your business is ready to sell either, right? So expectations are important. So with that in mind, knowing the type of exit that probably will happen is important too. So are you looking at a financial investor? Like you mentioned, an MBA, they're a financial buyer, right? They're buying the business for financial gain in the future. Whereas if you're looking at maybe a strategic buyer, that wants to buy your IP or they want to buy your customer base to expand their business, they care about things a little differently, right?
Mm-hmm.
I'm just buying your customer base and your IP. I don't care about your operations as much, which I even hate to say out loud because it is important. But just so kind of having a conversation with someone like yourself to know what the type of exit will be is really important, because that sets the stage for the kind of strategy work that you need to put together. But with that being said, having a clear strategy, know your goals across the organization, identifying the weaker areas of the business. Is it operations? Is it financial reporting? Is it sales? Is it marketing? Maybe it's service delivery. We could, in theory, say, well, we could turn on the switch and get a bunch of new clients, but we don't have the infrastructure to deliver our service in a scalable way. Identify those areas. Get really clear, because that's what is going to be your key factors in your strategy. So getting clear on those areas, build your clear roadmap, have some shorter and longer term goals. If exit is probably 3 years out, back it up, right? What do we need to do in the next 12 months and in the next quarter and quarter after that? That's important. I can't overemphasize the importance of having good reporting across the organization, having KPIs, having metrics to shoot for, but being able to track and report those things.
Yeah.
Right. That's so important. We went through an exit with a client. They actually went out to market to get some investors for some growth revenue. And they had such good reporting that the investors like, we actually want to just buy you. We know where you're going. We know what's going on. You're a great acquisition, a bolt-on to another company we have. And they just sold them. They sold the whole company. So your reporting is really important. I think another pitfall, and we've touched on this quite a bit, but it is important, is to have key employees that really can help run this business while you're away, if you will. Yeah. You can't step away for 6 weeks and the business doesn't implode. You're not ready for maximizing your value at exit. So I think all of those things, of course, financial management. I mentioned reporting, but having good financial management is critical too.
Love it. Love it. So you're tuning into Off the Record with KyleSellsBiz. We're hanging out here with Dean Isaacs, CEO and founder of the Vantage Group, and we're talking about how to grow your business through sales and marketing to increase your valuation. Those pitfalls are important, right? Setting the right expectations. Even for the seller that's selling their business after the business is sold, it's still, you have a lot of work. Because now you have a marriage. Now you can be married to that buyer for a little bit of a certain time period. So it's not, hey, I'm exited, I'm sold, I'm walking out the door. No, you're going to have to, help with that transition. That takes some time, and helping make sure that you transfer any goodwill that you have created to the buyer. So those connections you have with your top customers, right? And your key employees, making sure, give them some good faith that things are going to keep going and we're not going to make any major cuts and all that good stuff. I mean, it's so much to really consider. This shows the importance of having some professionals like yourself on the team. And one thing that I have seen, and you touched on it a little bit about, you're looking to sell your business and you get an offer, and all of a sudden you start taking the foot off the gas, right? Kicking back like, hey, this deal is done.
Yeah.
You got to keep growing. You got to keep moving on as if, you're not selling the business, right? You want to keep growing.
Yeah. That process, even once you've got a deal, an opportunity on the table, it's months or years in the making. And what happened is, you've seen it too, right? The revenue's been doing this, and then the owner takes a foot off the gas because they're looking at the deal, and the revenue starts doing this. You just devalued your organization. So again, it goes back to you as the owner should not be at the center of driving the business growth.
Correct.
You can focus on the exit conversation, and the rest of the team continues to focus on growth.
Exactly. We get some good feedback here, man.
Good.
Let's see what Daniel says. They have to stay on, the sellers, but depending on the financing determines which path the exiting team takes. So yeah, good point. Okay, so I think there's a question here. What's the first step when a seller in the service industry wants to sell, knows they need to sell at retirement age, but are caught in the hamster wheel of 40 years servicing clients and can't seem to stop? Maybe, can I show this question? Yeah, let's do it like that, yeah. Didn't know it has this feature, cool.
In the house, yeah. I think what we're seeing here is that, again, it's that very typical scenario where the owner is the business, right? They have client relationships, they're involved in service delivery and all of those pieces. So I would say, Daniel, pick the path of least resistance. Look at your organization. Think about, if you're the owner, where are you most integrated into the day-to-day? And what can you do to start pulling yourself back? Pick one area of the business. Is it operations? Is it finance? Is it sales and marketing? And start to transfer your knowledge and experience and delegate to your team. Well, I will say, if you don't have the right team members on board, that's where you need to start, right? You need to make sure you got the right people on the page. But if the business operations is in your head, which a lot of times it is, get some help to document SOPs, standard operating procedures. Document processes first. Get that out of your head. Pick the easy ones. That will help you start to delegate and train other people so you can get off the hamster wheel slowly but surely.
So listen to this, okay? So I love everything you shared there, and that's a logical approach. This is my 2 cents, okay? And I'm not a psychologist, I'm not a CRO or CMO or anything, but I'm just telling you from my experience in 16 years, clients have an identity business owners that want to sell, whether they sell or not, they have an identity. They've been Joe the plumber, Dr. Smith for like 40 years in the case. And so this hamster wheel you're talking about is like it's a routine, right? I go to work, I service my clients, and I come back, and this is who I am. In a lot of cases, that owner has to find another passion that drives them, right? Start thinking in the future, okay, well, I'm going to use the proceeds from this business to fund my grandkids. I'm going to be their manager for their sports career. I'm going to travel the world. I'm going to finally buy that boat I always wanted, right? Start redirecting their passions, not necessarily from their business, but, that country club membership they have and they never went and play around the Gulf in 2 years, going fishing, start thinking what charities that they can support. So in my opinion, I do believe that it's that emotional connection to the business where they're so dialed in that they need to redirect those emotions elsewhere to what their passions are.
Yeah.
And when you have everything you shared in place, it makes it easier. If you have a team in place that can run the company, your books is in order, you're up to date with your taxes and everything else, everything that sort of fits in. But I love that Daniel asked this question because this has been a pain point lately. I've had multiple clients in my office that are past retirement age and they're still running their companies because they love what they do. They don't have a next step, so to speak, as far as where they see themselves at, and they don't have someone in place a lot of times to take over the realm because that has been the identity. So it is challenging. I'm not saying it's easy, but I would highly recommend to anyone that's in that position to get a sounding board, a coach, a consultant that can help, get you grounded to figure out what your true passions, what's the legacy you want to leave back for your family and your team and your clients. So I love this question, Daniel. Thanks for asking. So we're about to wrap up here, man. So Daniel said that he's going to be encouraging his CPA to who does this. So fantastic. So we have had some, we can go on. This topic I love. I love revenue. I love money. I love profitability. I love everything you're sharing. I learned some new acronyms here. Those of you that are tuned in, appreciate you joining us today. So Dean, any closing thoughts, any closing remarks? I know we have given a lot of nuggets, but you have a wealth of information. What you want to share with everyone that's listening here today that they can take away from?
Yeah, I think I want to build on what you just said.
Okay.
So much of a successful exit is between the business owner's ears. When we identify as the business owner, that's how we identify ourselves. We don't identify ourselves as a grandfather, as a golfer, we identify ourselves as that business owner. That's what we think about. I would encourage everybody to start there. And you hit the nail on the head. What does life look like post-exit, right? It doesn't mean you have to go off and go play golf 5 days a week. It doesn't get clear on what the next phase of your life is. Because I've actually seen where business owners have exited, they've got bored and frustrated post-exit, and they've bought their business back from the original, the acquirer. It's like, holy cow, you just spent a whole bunch of money for nothing. So get clear on your identity, and that will also impact your identity within your business today. right? And it will change your role in the business today, which will allow you to step back step by step so that you're prepared for the next phase. So get some help. Get some help. Talk to your CPA. Talk to Kyle. Go get some advice. This is a long-term process, so you don't have to go at it alone. Find a great advisor, a confidant, someone, and get some help.
100%. I could not agree more. So, Dean, I appreciate you joining us. I think I'm going to have you back, man. There's a lot more because companies just take their foot off the gas. You want to keep pushing. So I'm sure there's a lot more you can share. I'd love to have you back one of these days. But thank you for your time this morning, this summer. Oh, we didn't talk about seasonality. Maybe we can get into that next time. How to smooth out revenue in downturns, right?
Absolutely.
But thank you guys for joining. Wish you guys have a great rest of your day. Until next time, you were tuning in with Off the Record with KyleSellsBiz and my guest, Dean Isaacs. Thank you so much. Bye.